Let's start off, guys. So, guys, welcome again to our bi-weekly spaces. It is Sunday today, so this is going to be a more in-depth review of the markets on what has happened this week. Where do we see the market? And if you haven't visited our website, do visit thefinancialsummit.com. We host a luxurious event for financial people every year, once a year. It's a gathering of a lot of people from the hedge fund managers to money managers to traders to financial analysts, VCs, we have technologists, we have even nutritionists over there. So it's a very different vibe to the whole event where we get to be staying at a luxurious place for 5 days, talk about finance, talk about a lot of other things, and make new connections. So if you haven't visited, please do visit thefinancialsummit.com. Also, Tone and Matthew have been doing some live videos on YouTube. So do visit our channel on YouTube. You have one live video every day, and we just had our first trader talk, which went out this week. So please do visit and watch it. It's really amazing. So, Tone, before we start, tell me about what this trader talk was. Like, what is the intention of the financial summit? You must have watched it, right? What did you feel our intention was from the financial summit perspective? Why did we think of doing these talks?
Yeah, of course. And I'll go real quick because, like I said earlier, Joe is now a speaker, and I know Joe has limited time. Trader Talks is going to be a series by Matt McGregor where he will try to bring on, the best traders that, he can get on the show. Obviously, people like Paul Tudor Jones and, Stanley Druckenmiller. I mean, these guys are going to be very, very hard for us to get maybe in the future when the channel has 100,000 daily views. So we try to bring you traders that really know what they're doing, that are professional traders. You may not know them too well. I mean, people in the Bitcoin space will know some of them, but that's what the show is about, to try and bring you another perspective from a respected trader.
Sorry. Yes, that is lovely. Hopefully, we'll be getting a lot more nice traders there. Joe, welcome. How's your day going? I'm not sure, but is it the Super Bowl day today?
It is. It is. Happy to talk to everybody today. I do have limited time here, but I got a little bit longer than I thought, Tone, so that's good. And good
Oh,
to see
great.
you, Tone. Sorry we didn't sync up beforehand, but hopefully we can do later today.
Lovely. Let's start off, guys. So let's start off from the Bitcoin. Bitcoin had a lovely week. I haven't seen the chart today because I don't like to look at the chart on weekends, but broke 48K. Well, it's up even today. It's around 47,987. Broke 48K quite cleanly. And if this weekly close goes as planned, we are looking at a very, very nice breakout of this bullish flag. Joe, what are your insights? We had this chat on Wednesday. I think you were not there on Wednesday, but you were there last Saturday. And we had this chat about halving and price and guesses and everything. Does this close give you more of a thinking like our edge case scenario where we were discussing maybe it will not stop and this break, this candle, this weekly candle looks beautiful. So what's your perspective? Have you changed your opinion on the price action?
I haven't really changed it. The only thing I think I'm more inclined to after the last week of price action, and really it's not just Bitcoin, it's the equity market in general, is that I think we could be on the verge of a massive move higher, which I think many people do not expect. The sense I'm getting just from a psychological perspective is that there's a ton of people out there in the market that are trying to call a top, and that's generally not when you see a top. So to me, I'm very bullish in the near term. I think that you could see a quite favorable price action both in the equity market, which I'm sure we'll get to, and Bitcoin. And then the question is, where do we go from here? I guess that's something we can deal with, a month or two down the line. But man, I mean, God, look at the charts. I mean, everything looks fantastic to me. Really, I mean, look at the Nasdaq. I mean, the Nasdaq looks incredible. And I think there's one trade, right? I think it's long risk assets here.
Oh, 100%. Like the more I look at the market, so I'll be very honest with you. I was expecting a pullback. I was one of the gang which was thinking that we should be going a bit lower, just giving that small pullback and then getting more momentum in. But when I see the equity markets right now, to be honest, when I see Bitcoin right now, we are looking at a CME gap right now sitting at around 47 something, 4760 area. So we are looking 47 $160 area. And it's looking incredible. Like it's a proper chart pattern, it's a proper breakout, and I am getting bullish and bullish on this market. What, in your opinion, Joe, can turn this market from being bullish to bearish in the shorter term or even in the medium term? Do you see any negative impact in the economy that might come and, you know, change everything?
Yeah, it's a great question. I mean, to me, like the one thing that, this market thrives on narratives, right? And the narrative that is dominating right now is that inflation is beat. I mean, you saw the price action on Friday. Every market reacted very positively to the fact that inflation estimates for the prior month have been revised down. Obviously, that's backward looking. But like to me, the narrative, and again, this is not my expectation, so I want to be clear about that. But like, if I had to look at things that from a probability standpoint that could change that, is if you were to see some sort of reacceleration of inflation, reacceleration of CPI or PCI, you've got numbers coming out soon, that could potentially change the game. I do think that the concentration risk in NVIDIA is somewhat of a tail risk that you should think about. You've got NVIDIA earnings coming up, I believe, not this week, but the week after that, and that that company is priced. It's priced beyond perfection, if such a thing existed. I mean, what are they trading at, like a 100 PE ratio right now? It's just crazy how dominant it is, and it just keeps going higher. So I mean, a serious pullback in Nvidia, I think, because of its outsized influence, has the potential to mean a short-term, emphasis on the word short-term, correction, and I think all asset markets will trend together at that point. If you have the S&P pulling back 5 or 6%, then I expect Bitcoin to sort of have to at least be in a consolidation pattern while that occurs. I'm not one of these people who think Bitcoin can absolutely rip all the equity markets in a significant drawdown or a short-term drawdown. I think they're generally pretty well correlated for a variety of reasons, particularly now with the ETFs. But that's not, again, that's not my expectation. My expectation is to grind higher from here, and I actually think in the near term you could see more of an explosive move higher. But markets can surprise you, so I'm prepared either way. With the way I have my allocations, I don't have a ton of capital left, like sitting on the sidelines here. So, like, to me, if it dips, it dips. It's not going to really influence my decision. I've been fully in for a while, but yeah, no, I mean, those things are the top of my mind. It's just something that could trigger sort of a short term, pullback.
You want me to
So,
jump in on
Tone,
this as
do you
well?
wanna
Yeah.
comment on this?
Yeah, I pretty much agree with everything Joe said, though just like yourself, I I am leaning towards a pullback as well, though it's a little bit it's very hard for me to like be specific here on a pullback. Just like Joe, I am 100% long in my account. I don't have any spare cash to add any more exposure to the bullish side of Bitcoin. Now, that's in my that that's my real money on the line. Theoretical trades, as those of you that watch our show with Matt McGregor every morning know that for this weekend, in our little theoretical contest, I took the short trade. And that's because I do think we are a little short-term overextended. Yes, this is a great week. This is the kind of week that has the potential of taking us significantly higher. We had a similar monster breakout week, the week of October 23rd, and the market kept rallying significantly higher. So just to throw some numbers out there, the breakout that week began as we broke above 30,000. That week closed at 34,500. So that was a $4,500 candle, which is similar to the current candle at 5,500. But today's candle started from around 40,000, 41, 42 to be exact. So by percentage, they're about even. The current week is up 13%, and the week of October 23rd, was 15%. So they're almost identical in percentage terms. Now, what followed that week? What followed that week was an additional 25% rise after that initial week. And it went up for like 6 consecutive weeks. But the main difference between the candle that broke out on October 23rd was preceded by like 6 months of consolidation. The current week did not precede by 6 months of consolidation, it only preceded by like 2 months of consolidation. So that's one of the reasons why I don't think a massive week like this is going to rally us another 25% without some kind of a pullback or some kind of a significant consolidation. Now I do have a high that I'm anticipating here. I'm anticipating the price to top out between 52,500 and 57,500. I'm expecting that to be the top before the halving. Obviously, it can blow right through that and go to 300,000. Anything's possible. But right now, considering how much we have already gone up in the last 6 months, and this consolidation wasn't that long, and the pullback off of the swing high the day before the ETF was not that big. I mean, yes, if you technically cherry pick to the penny the high before the ETF got announced, and you cherry pick the low that took place 3 weeks ago, it may seem like a reasonable correction. But because that swing high right before the ETFs launched was so artificial and it should not have happened. Like when I look at the weekly chart, that swing high into 48, I'm almost ignoring that. So to me, a normal high was only 45,000. That was the normal high. And the pullback was down to 40. That pullback wasn't that impressive. So I still think that very short term, it can easily pull back, though it doesn't have to. So while I am bullish, intermediate, and long term, I'm a little cautious rushing into Bitcoin trades to the long side, especially leveraged versions of those trades right here, right now, on the very, very short term. I think that's as most detailed as I can explain it without staring at the charts.
Okay, so I saw a thumbs down from Joe Tone. For once, we will be having a debate. Go on, Joe.
I'm sorry. What did you ask?
I saw a thumbs down from you. You surely had some comment
Oh
that you did.
yeah, no. I mean, I Tone made a comment about how it could blow past 50,000, go right to 300,000. I think that's kind of ridiculous, to be honest.
I
But
know I was being sarcastic, Joe. I was totally being sarcastic, right?
Come on, guys. I was excited we were going to have a debate. That's fine, though. I disagree with one of the points, Tone. I really feel that 57,000 area or whatever area we are, like you said, you might see a pullback there. If we are talking on the weekly time frame, and this is just my thinking, and trust me, I'm not the best trader in the world. We guys have Tone and Joe who are much better and they know more than me. I really feel we are going for all-time highs. Pre-halving. I I am it's a just technical analysis from a chart pattern perspective. There is a flag which is breaking out. The target of the flag is around $64,000. If we are coming close, FOMO is going to kick in. It will overextend, and then we will see a deviation and start coming down again for a pullback. That's how I see it. Could be completely wrong, but that's just my analysis. So let's
it's
go on.
certainly
Yeah, go
possible.
on.
But it's certainly possible. To me, I really hope that doesn't happen because I feel the higher we go without a substantial correction here, the more painful it will be in the interim. And people don't, people feel free to disagree with me with that. But if you march right up to all-time highs, then I think the latter part of this year we're going to be sitting in the $40,000 range for a while.
I totally agree with you. I totally agree with you. But the only reason, so I base my analysis based on TA, and obviously just on looking at what historically Bitcoin has done. Obviously, you cannot have replication of history every time, but history, price action rhymes with history. And every time you see Bitcoin's bull run, I've noticed it basically you keep waiting for that pullback, and that pullback never comes, right? And I feel it's because of the FOMO. And this time there are a lot more actions that are happening in the market which are bullish in nature. Like GBTC selling pressure is going down and down. Other selling pressures are going down and down. Markets are exploding. SPX, Nasdaq are breaking all-time highs. BTC is still sitting 30 odd percent, 40 odd percent below that. It has a lot of room to, run. And I feel it will catch up, and that catch up will be very, very explosive. It might be that we might be sitting end of year 40,000, but that my understanding of the chart right now is telling me there is a lot of room to go, and it will go that room. It will create an all-time high before halving so that it comes in sync with the other markets. And then what happens, we will see the charts will tell us the story, and the price action will tell us what it wants to do. Their last question for this
Well, hold on.
section of
Let me just
We
chime
got to
in real
explore
quick.
that for a little bit. Go ahead, Tone.
I was going to say real quick. So, if you watch that interview with Fibbo Swani that Matt did, Fibbo pointed out something very, very interesting that I did not know. In all three prior halvings, Bitcoin, not only did it not make a new all-time high before the halving, it never closed above the 62% Fibonacci line between the prior all-time high and the prior bear market low. And right now, that 68% Fibonacci line is literally at current price of 48,600, like 48,600, let's say 49,000, right? So in all three prior cases, Bitcoin would have not closed above that 49,000 mark. So if Bitcoin closes on a weekly level above 49,000, it will be the first time Bitcoin was this high relative to the prior swing high going into the halving. Now, of course, in all prior halvings, Bitcoin ETF wasn't on the table. That has just launched. So that is certainly helping driving the market a little bit higher. So I am keeping an eye on that to see if this is going to be the first time this happens.
And go on, Joe. You wanted to add something? You wanted to
Yeah.
explore it further?
So there's something really interesting that, and there's two ways. There's the bullish scenario and the bearish scenario that you need to look at in markets. And we talk about the stock market, and obviously we spent undue influence on like the Nasdaq and the S&P 500. But what's interesting to me is that it's still the story with the Russell. Okay, and what story the Russell is telling. Now you could paint the bearish narrative that because of the concentration risk, basically everybody piling into the same mega caps that are bulletproof and then not interest rate sensitive, that those companies are so powerful and so good from a balance sheet perspective. It's the only place you should park capital. That's the sort of like the bearish narrative, I think. The other narrative could be that, look, we could be at the beginning of a very strong rally across risk assets, including the small caps, including your more speculative beta stocks, and the generals, right, the leaders. Those have just been the first ones to run. And you alluded to like the catch-up rally. And well, the question I was going to pose to you is, do you see a catch-up rally in just BTC, or do you see a catch-up rally across the board where even small caps and more beta plays in equities, everything rallies to really catch up to the outsized performance of the mega caps?
So that's well, for the first time, guys, I've been asked a question. It feels so good. As a host, you don't normally ask that, and it's good that I really want to answer that. So yes, I agree with you. I want to see a catch-up rally in small caps and beta stocks as well. The reason being, we discussed it last week when I said that the market breadth doesn't look good. From my perspective, I was like, only large caps are pumping, and the market breadth is like even S&P 500 has 500 big companies, but still the smaller of the 500 companies were not showing strength. And then suddenly, Joe, you mentioned that don't look at it. And I was like, okay, makes sense. It might, and you said it might change in a day. And it did change in a day. Suddenly, 2 days after we had that conversation, the market breadth started showing 70% green side. So 70% of the stocks in S&P 500 were strong. They were green on the days. They're showing strength. And then again, they showed more strength the next day. So I started seeing that reaction coming from the market saying, well, everything wants to go higher. Market is confident, market is looking bullish. So yes, I expect small caps and beta stocks to be showing strength with BTC and trying to close that gap that has been created by some of the very, very strong stocks. TC, you came onto the stage. Do you have a question?
Hey guys, yeah, thank you so much for having me up. I'm a big fan of Tone, and I really do appreciate the spaces. I just wanted to jump up because we just hit a major milestone on the network, which is only 10,000 blocks remaining to the next halving. I hope you don't mind. I shared a little tweet up in the nest to that effect. I would ask, with all of the eyes on the market, the way that you guys are looking at things, does the halving figure in any way into market activity, or are the sort of financial markets kind of unaware or naive to the significance of the halving relative to Bitcoin, or is it just sort of a uncorrelated thing that really there's no impact of this protocol change to the way the markets look at BTC, the asset?
Tone, you want to take this first?
Sure, that's a great question. I'd love to get Joe's take as well. The halving absolutely factors in. I've always, leading into prior halvings, I've always said the following. The 6 months prior to the halving are probably the most stressful time for Bitcoin mining operations. They know that they're going to lose 50% of their revenue the moment the halving happens. And like, obviously, if you're running a business, you want your business to be, like a race car pit stop at all times. But in reality, people get lazy and there is, certain deadlines. But the 6 months prior to the halving, every single miner that can be online goes online. This is probably the most stressful time. They want to squeeze out every possible Satoshi they can make with their mining operation because some mining operations are probably going to shut down after the halving unless the price of Bitcoin significantly rises over the next few weeks. So from a mining perspective, that's relevant. Now we can also see that the mining stocks are not performing very well. Now I do have exposure to Bitcoin mining stocks. You guys know what my two favorite mining stocks are. They are Bitfarms and CleanSpark. And most of my investment, I have options on option trades on Bitfarms, and I guess I didn't pick the right horse out of my two top horses because CleanSpark just crushed earnings. It was up like 30%, and that was CleanSpark. And Bitfarms earnings is next month, and they didn't move at all on the amazing earnings from CleanSpark because usually when a company in a sector has very good earnings, a lot of traders assume, well, if this company did well, here's a company that's identical to that company. They probably will also do well. I know that's not always true, but there is some correlation there. When a sector is performing well, everyone's performing well. So Bitfarms didn't do that. So from the point of view of miners, investors are very, very hesitant in investing in mining stocks because they know they may be in trouble after the halving. Now, what about the price of Bitcoin? Yes, the Bitcoin ETF is the lead driver right now. But the second lead driver is trader speculation on what the price is going to do post-halving. Yes, there are short-term traders, there's day traders, there is scalpers. These people don't care. But that's not the majority of traders. The majority of traders are actually not day traders. Day traders correspond to a very small total, market value. They provide some liquidity, but they're not the biggest holders of any asset as day traders, unless it's penny stocks, and even in that case. So what about the swing trader? The swing trader is trying to analyze, okay, when is the top going to happen? Bitcoin always tends to top before the halving, and it tends to pull back into the halving. Now, does it have to do it this way this year? No, but that's been the history. And I like patterns. So I am expecting the top pre-halving in that mid $50,000 range. That has been what I've been saying for a while now. I actually raised my target a little bit recently, but I am expecting that top. And now traders need to estimate, okay, so is that top going to happen next week in the mid 50s, and then we're going to be pulling back for the next 2 months? Or are we going to slowly move into the top $50,000 range, and then the pullback's going to come after the halving? So, if you've pre-run it too early, or you can be late to the market. So I think every single trader is factoring this into account. And the reason why right now Bitcoin is worth $48,100 is because of this dynamic of where people think the price is going to be around the day of the halving. So yes, it's factoring into it a lot.
Hope that answers your question, TC. Thanks a lot for coming
Yeah,
up. Joe, you wanna come in on that as well?
Yeah. So just to add a little bit, so if you look at the halving, okay, the actual decrease in the block reward, I don't think in particular has a lot of meaningful impact in the short run. On just look at the actual additional Bitcoin coming into the market. I don't think with a multi-$100 billion asset, it's going to affect as big as many people do think it does. But the narrative affects people. People have this idea that the bull run always comes post-halving. That's the time when you want to be positioned long. So I think that decreases psychologically people's willingness to part ways with their Bitcoin, which is sort of it's become sort of a self-fulfilling prophecy with the halving, that people actually decide, yeah, I'm just really reluctant to part ways with Bitcoin. Something has to really scare people into triggering a significant downturn. Now, that is not the same as to say, you can't have a correction, which I think is more driven by the swing traders, which is what Tone is talking about. But it's not really driven by the hodlers, the people that are positioned long, have acquired coins throughout the bear market. So to me, I think that's not going to really be significant. However, what I do want to emphasize is as Bitcoin grows, as it becomes more mainstream and you have more of Wall Street exposure, folks do tend to look at the equity market and look at the overall macroeconomic picture and decide we are going to lighten up on more beta plays, more risk plays, which unfortunately Bitcoin is lumped into. It is not a coincidence that Bitcoin peaked in November of 2021 alongside dozens of other high beta plays, the Cathie Woods ARK ETF, many other assets in the traditional legacy market. They all peaked around the similar point. Some of them peaked a little bit even earlier. Bitcoin had that second pump with the futures ETFs launch. But the reason I say that is that if you're looking, I don't see a scenario, or at least I put it very low probability, where the equity market is raging higher and the S&P is going towards 5,500 and Bitcoin's plunging back down to 30K. It's possible, I suppose. I just don't see it. So I think that the more of the global macro picture with respect to risk assets is much more impactful if you're trying to decide where to call tops and bottoms.
Go on, TC.
Yeah, I mean, I love hearing these perspectives because they're pretty different than mine, because I am not a trader. I do appreciate the fact that traders are trying to, figure out what's going to come up next in the short term and different time ranges beyond that. For me, I just want to, since I'm up here, just put out there my perspective on it, which is that I'm going to disagree with you, Joe, that I think that the halving this time around is somehow less significant than prior halvings. I actually think if you look at it from the point of view that there's so many more people competing for these rewards than there were the last halving or any of the previous halvings, and the fact that the subsidy, which is the part that's getting halved, the miner reward is composed of one part subsidy, which is the new issuance of Bitcoin supply, and then the fees that they get from the transactions they choose to put in the block. But it's the subsidy that gets cut in half. And out there in the world of mining, you've got a whole spectrum of different people, how they're positioned as far as their profitability mining. There's a ton of people that are right on the margin, hardly profitable today, and that subsidy getting cut in half, the impact on the total reward is enough to knock out a whole chunk of participants every single time, because a lot of people are doing the mining on very small profit margins. It's so competitive.
TC, so do the math. Okay, how much Bitcoin in dollar terms right now needs to be absorbed on a daily basis from new miners? Do you know?
Are you talking about new Bitcoin issued?
Yeah, new Bitcoin issued. How
900.
much? Okay, 900 new Bitcoin a day, correct?
Correct.
Okay, so do the math. That gets cut to 450 new Bitcoin a day, right, in terms of absorption. So you multiply those out by the current price of Bitcoin, you can do the math, and if you look at actual new money required to sustain the price, okay, you're amounting to a fraction of the total Bitcoin market cap. That's just the math. I mean, it's not
right,
really arguable.
No, I understand that. I understand that. That's one perspective. Another perspective is from the perspective of a miner, maybe a small scale miner.
Yeah, they're going to go bankrupt. I mean,
no, but that's my point. That's my point. Is that every single time there's a halving, you're going to have churn. You're going to have certain participants that it's the death blow to them, and that's the thing that, to me, I don't have such an easy time looking at that as, oh, well, just because it's going from 6 to 3 this time instead of from 12 to 6, that it's not going to have an impact. It absolutely has an impact on
TC,
those that are not profitable.
the lesser miners going out of business is not really going to affect the price of Bitcoin.
100% correct. They're
Right.
irrelevant
So
for many
I
purposes.
think that's the point that Joe is trying to make. I will just add one more thing to what Joe was saying. What Joe was saying was everyone is anticipating, not everyone, but you get the point. Everyone is anticipating that the price of Bitcoin rallies after the halving. That's what it's done historically. So it makes it a lot less likely that anybody would be selling right around this time. However, I will add one more caveat to that is that because everyone is expecting the price of Bitcoin to rally after the halving, everyone thinks they're smarter and everyone is rushing into Bitcoin now because they want to pre-run, they want to preemptively enter the market that they're expecting to go significantly higher past the halving. And this is one of the reasons why the Bitcoin market tends to top out before the halving because there's nobody left to buy and the halving is not even here yet. And that's why prices tend to pull back. Now, if that does not happen this time, right, if this is going to be the first cycle where we start rising and we continue rising for the next 2 months without a significant pullback, and then we continue rising past the halving without a significant pullback, that's potentially sets us up for a disaster next halving because now people are going to be anticipating this new paradigm that Bitcoin didn't even pull back before the halving. And next time, I think they're going to get the double or a triple version of what a crazy pullback looks like when there's nobody left to buy.
I got it, and I hear you guys loud and clear. Like, don't think that I'm like nullifying or trying to deny the perspective that you guys are putting forth. I'm just coming from a totally different perspective around I actually do some mining. And so, for me, it's been something like in my internal calendar, this this coming halving is like a major blow to whatever profit
TC,
margin and whatever I'm actually participating in.
Right.
TC, I'll just tell you,
Go
I
ahead.
represent smaller and mid-sized miners, okay, and I know for a fact, without giving any inside information, just based on what I've heard from other entities who I don't represent, that there will be an absolute deluge of bankruptcy filings among small and some mid-sized miners post-halving, and they have Bitcoin on their balance sheets, and that will be liquidated. So yes, I don't disagree with you that it will actually hurt a ton of small miners. It's going to put them out of business, and many have been hanging on for that very purpose. Now, the problem is, though, if you're trying to use that as like a bearish narrative, is that the bigger cap miners are the ones that really matter.
Well,
Guys,
I think the last thing I'll
wanna,
say, and then I'll step down, is
go
that
ahead.
the other narrative that I pay a lot of attention to is basically just the supply of Bitcoin. We're at a point where we're beyond. We have less than 7% of the total supply to be issued over the next 100+ years. The halving, for people who are maybe looking at it from a trading perspective, it's useful to remind yourself this is a supply shock event, and that this is the manifestation of Bitcoin's scarcity proposition, right? Like its value prop as a scarce asset is because of these halvings. And the halving is literally a manifestation of the next stair-stepping of supply issuance getting cut so that eventually there is a fixed supply. So I would just encourage people not to forget this is also something extremely scarce. The halving is why, and you might want to actually like accumulate and hodl some of this Bitcoin instead of just trade it. That's all I got to say.
Yeah, no, that's great points, and it's definitely something everybody should remember. That's the whole reason why we're attracted to Bitcoin, because of its finite nature. But just remember, when you're talking about the float, okay, the available Bitcoin that can be purchased, that is dynamic. And a lot of people look at these like, oh, there's only X amount of Bitcoin on exchanges. How many Bitcoin do you think would be on exchanges if Bitcoin were six figures right now? I would argue it would be a lot higher. Because I think there are tons of people who I just anecdotally know that want to lighten up or sell some Bitcoin or buy those houses at 100K Bitcoin. I talk to them on a regular basis. Many of whom are clients. They're saying, yeah, we're going to take profits above six figures. So the float is dynamic. The float, yes, the overall supply is fixed, but the float is dynamic, and the availability of those Bitcoin, they will come in from cold storage above 100K, at least some of them.
Well,
Absolutely. Thanks for having me up, guys.
Thank you so much,
Hey,
TC. That was a really, really amazing conversation.
I want to go back to something that Joe said because I was going to say something that was a bit contradictory. So I would like to explore it a little more. Joe, you mentioned that if a small miner is to shut down operations after the halving because they are no longer profitable, you mentioned that they would be liquidating the Bitcoin that they hold. And my logic in my own brain tells me this is likely to be the opposite. If you are about to shut down operations because you know you're not going to be profitable going forward, the best thing you can do is to hold on to the Bitcoin because you no longer have to liquidate the Bitcoin that you've been holding on to in order to pay, your electric bill, your utility bill. So the best way to make up for, the last, 6 years, 8 years, whatever your mining operation has been around, the best way to make up for all that effort and all that time and all that work is to hold on to as much of that Bitcoin as you can through the bull cycle. So I would have, my logic tells me that the more of these small Bitcoin miners go out of business, the less Bitcoin liquidity is going to come into the market because they're not going to liquidate that Bitcoin. They're going to hold on to it because they don't have to liquidate it to pay bills.
Yeah. So I was specifically referencing bankruptcy because there are dozens of small, even some mid-sized miners that they financed their operations. Many of whom did so at the end of 2021. They got in literally at the top. They've been struggling to survive throughout the bear market. They owe a ton of money in the form of electrical costs, labor costs. They borrowed and borrowed and borrowed, trying to hold on. And when the halving comes, the rubber will meet the road. I mean, they're just not going to be able to survive. So when you file for a bankruptcy protection, if your entity has been holding Bitcoin, which many Bitcoin miners love to hold Bitcoin, at that point, everything goes into the hands of the bankruptcy trustee. They get the debts, they get the assets, assets and liabilities, and then they basically say, okay, here's what we're going to do. We're going to liquidate these assets. We're going to sell these miners, and we're going to liquidate whatever real estate you have. We're going to sell off these rights to these minerals, wells, and so forth. And what they do is they also sell off your Bitcoin, and then they say, and then we're going to use it to pay 50 cents on the dollar to your creditors, and basically at that point we're going to discharge the remainder of your debts. So a lot of entities set up these shops in 2021, and the reason they set it up with a ton of leverage is because if you remember at that time, the popular narrative promoted by many Bitcoin influencers, which I know Tone and others spoke out about against, was this super cycle. Bitcoin's never going down again. It can never crash 70%. We've got all these bullish things now. I remember people were bullish about the futures ETFs and Wall Street's here. Like it's always the same. And they got totally over leveraged. So like I said, that's who I'm referring to, the forced liquidation, about people who are going to be filing dissolution proceedings with the bankruptcy court.
No, good points. Good points. And hey, I will admit that back in November of 2021, I was bullish. I really thought I did not see the double top coming at all. I really thought that once we broke out above 65,000 in November, we're heading into the 80, $90,000 area. I was still realistic. Many were calling for 300,000, but I did not anticipate a double top. I thought we would make a clear higher high before another big pullback.
Well, only if we knew about what's going to happen with the price. If we could predict it to be to the precision, it would have been a different story. And that's why it's analysis. You analyze, you decide, and you see how it goes from there. So,
well,
guys,
this is I was bullish too, but the interesting thing to me is that again, I still think there's too much of a myopic view in Bitcoin that just ignores these other asset classes. I mean, if you were looking at the carnage in the bond market and looking at what was going on with the stock market, it probably should have been a very easy tell for people. I mean, even as late as March, when we were hovering in, I think, the 40 range, I think it was 42, 43, someone correct me, the exact number, but Bitcoin was still, above 40, and the equity market was just dumping. And it was going south quick, and the rates markets were out of control. So the folks that say, oh, let's just stick our head in Bitcoin and ignore the rest of what's going on in traditional finance, I think it's a huge mistake.
100%, guys. Can you hear me?
Yes.
Lovely. So, okay, lovely. I didn't think this Bitcoin conversation, I wanted to do it in two parts, but we had a lovely time discussing Bitcoin over the last, I think, 40 minutes or so. So that was great. Moving on to the stock market, because I know Joe doesn't have a lot of time. Now, I do not want to go way too much in depth, but I really want to understand what kind of a bear market or recession are we under that S&P has traded 14 of the last 15 weeks as bullish, and that has not happened since 1972. So that we are talking about more than half a century of price action of history where S&P has not done this. Now, that's the first part of the question. The second part of the question is that now the emerging market stocks are starting to see a massive inflow. Like there was a weekly inflow of around $20.8 billion. That's the most in its history, right? What's your thoughts on this, Joe? I want to start off with you and then come back to Tone because I really want your opinion on these.
I think it's all in response to a single thing, which is the issue of consumer prices and inflation. That is response, and I'll explain why when it comes to emerging markets. So the emerging markets, as are if you're looking at them in dollar terms, it matters quite a bit. If you look at them in native currencies, they tell an entirely different story. And the notion that you can avoid a recession and the Fed can actually either continue to remain at these levels or potentially I might disagree with you on this. I do think they do just some face value cuts in the later part of this year, not because of a recession, not because of bad economic news. I think they just say, at this point we're mission accomplished. We've succeeded in bringing down inflation, and I think the data you saw at the end of the last week is painting that narrative. I think you see consumer prices falling across the board. And to me, like going back to the emerging markets, as they price in and continue to price in lower Fed funds rates, that has an effect on the dollar. One of the reasons the dollar has remained relatively strong has been because we have had some of the highest interest rates in the world, from the developed nations. We have those higher interest rates. They effectively support the dollar. And the countries that don't have as high, they have sort of a disadvantage from from a foreign exchange perspective. So the inflation trade is everything. Inflation coming down without a recession, which again, it's a big if still. I mean, I don't expect a recession in the near term. I don't think you see any data that really suggests it. But if you are able to accomplish that, then I think the equity markets are going to rip. I think there's still a ton of people that are positioned overly defensively among all asset classes. They still are, just cannot get out of their way to think that there's not imminent collapse coming on the next month or next quarter, as they've been saying for over a year now. So to me, the next ones to move are going to be emerging markets. And I also agree with the earlier comment you made about small caps. I think small caps are the most risky stocks. Like if you had to do a risk spectrum of what you want to hold going into a recession, not saying we're having a recession, but if you were to put that risk spectrum in place, the riskiest thing would hold would be the small caps, right? Because they are the ones most likely to face bankruptcies and all sorts of issues with it, with their the weakness of their relative strength. The ones you would absolutely want to hold have been the mega caps, right? Because those can weather the storm of any recession. So to me, now that people are finally waking up to the fact that you can bring inflation down without causing a recession, that's very bullish for all stocks, all risk assets across the board. And I think it's very bearish for bonds because I still think there are a lot of folks that are piled into bonds at this point, expecting the great financial crisis 2.0 in the near term.
Tone?
Yeah, I don't have much to disagree on. I will comment on something I've been saying for a long time. One of the main reasons you see the big the I mean like the Dow Jones leading, the Nasdaq 100 leading, and Russell is lagging, is international capital flows. If someone is moving money from another country to invest in America, they are not investing in some stock that ranks number 1500 within the Russell. They couldn't care less. So the more Europe, goes into this disarray with the military conflict, the more there is a military conflict in Asia. Any money that is leaving Asia, any money that is leaving Europe, that flows into the United States, that money mostly enters the blue chip companies. So this is something that I've been aware of for a long time, and we're seeing it play out. Now, yes, eventually the market plays catch up with the small cap stocks, but this is just another reason, right? It's not the only reason, but it's an additional contributing reason. And this is why I never cared about Russell 2000 being a lagger. I don't see it as some kind of preview of what's going to happen in the future that the market's going to go down. The markets eventually go down. There's eventual corrections, but it's not going to be because the Russell was lagging the Dow Jones or the Nasdaq. So they just wanted to throw that in there. But everything Joe said, I agree with. And yeah, Joe, I can definitely see the Fed lowering the rate by 50 basis points, 25 basis points, 50 basis points. I can see it for the reasons you stated, Joe, and also just for the press to leave Joe Powell alone. I think I said it last time. Eventually, sometime this year, he's going to say, all right, I lowered it. So just, shut the F up. Well, there you go. Enjoy.
Yeah.
That's good. So that's a fair point, and I vibe with that. Like, I feel this is like it is going to happen. We'll see rate cuts. And when you Tone, you talked about all these things, and you said, okay, he's going to lower it because of the pressure that he's under. Well, I started seeing it from that perspective. I'm like, yeah, that makes sense. So,
Well, one other thing. The other thing why he's going to lower it, because a 25 bip cut saves the government billions of dollars.
another perspective. I get that's the best part about being a host on Financial Summit. You kind of get so many perspectives, and you can, oh yeah, this can happen as well. So I'm not going to go into details about each company that has been killing it in the last week or so, but I'll just tell you the names. Microsoft shares are closing at record highs. Nvidia has hit another all-time high of 702.20 and closed above $700 for the first time in its history. Alibaba has announced 25 billion stock buyback. Disney has jumped in share price. Well, PayPal was a weird one. They basically went up 10% just only to go down 8%. So that was a weird one. It was more an earnings play, I think. But I want to move away from the US market, if you guys don't have anything to add to what you have talked about, and go a little bit towards international markets. Now, Japan stock has hit a 34-year high. Like, Japan is showing strength, and this is like it's a conflict right over there, Japan, China. Even though they don't say it, there's still some. Japan stock is rallying. It's at a 34-year high right now. It's sitting pretty, whereas China is going down like anything. Even though they're basically trying everything in their power to kind of be in a good position. They're still not able to achieve what they wanted. So we chatted about it, Tone, last week, and we had a fair discussion that it's a good place to catch the falling knife if you really wanted to do that, even though you said you would not do it. Like, it was looking like a pretty place. It's looking like a very good place. But Joe, we haven't got your input on this. What are you thinking about China right now? Like, a lot of things have happened from the last time we talked about. What's your thoughts if you know about it right now?
Yeah, let me just start with the one thing that I have to just drive home, because it's something I fundamentally believe. Many folks, particularly in Bitcoin, and some people in libertarian circles, argue that, the only reason the U.S. stock market continues to do well is because of QE and money printer go burr. And I think the case in point of China and their government's intervention directly rebuts and refutes that. So anybody who tells you, the only reason the U.S. asset market rises is because of quantitative easing or stimulus, just point them an example of China. They cannot get their market to find a bid at all. Now, with respect to Japan and the U.S., I definitely know anecdotally from some people that have handled the trades that there is absolute capital flight, the type Tone is talking about, out of Chinese markets into Japanese stock market and into the U.S. stock market. That is a thing. It's real. I think it's helping drive some of the price action we're seeing. I think that capital goes where it's treated best. And if you're going to basically decide between the three, you easily prefer Japan and the United States over the Chinese stock market. So to me, I think it's sort of yet another factor playing into the equity market currently. I expect it to continue. and China's got real problems. I'm not very bullish on China. There may be some people in the room that are, but I think that they're extremely challenged for the next 5 to 10 years.
All right, let me jump back in here because I actually had no idea what Joe said that the Chinese would be putting money into the Japanese market. And the first thing I did, I am sitting in front of a computer, I went and took a look at the Japanese equity market, and they are on fire. They are absolutely crushing it. I mean, I didn't put a percent. I had no clue. I wasn't paying attention to the Japanese equity market. But I think the Japanese equity market has probably crushed even the U.S. equity market. Now, I will add that the Japanese are finally, I mean, I've been saying for 10, maybe even 15, 20 years that, hey, wake me up when the Japanese government sector finally collapses, right? Because everyone's been talking about the massive debt to GDP and how Japanese society is going to implode. And I've been listening to that for over 20 years of my financial career. And I've pretty much given up on it. But now that I've given up on it for over a decade, it's time to slowly start paying attention to the potential that 3 to 500% debt to GDP is going to cause some kind of a problem. Now, this goes back to what I've always said about the United States. What happens when your population starts to lose faith in the public sector of your country? The public sector is the government bond sector. The public sector is the trust and faith in your currency. You're now watching the Japanese FX rate on pace for back to whatever it was back in the 80s. Okay. So the Japanese yen is devaluing against the dollar. It's currently sitting at 150. This is approximately a 35-year high or low, I guess, for the Japanese yen. Or it will be once it breaks 152. Right now it's at 149.
Low, not high.
Low, yeah.
Low.
Well, again, depends from which. It's the low of Japanese yen against the dollar, right? So the Japanese yen no one has faith and confidence in the Japanese yen. People are starting to lose faith and confidence in Japanese bonds, even though they still have a very low interest rate. But remember, it's no longer zero. So what do people do when they are scared to hold their money in Japanese yen? They are scared to hold their money in Japanese government bonds, but they can't exactly move their money out of Japan. Now, they may not want to move their money out of Japan because they are, they have nationalist tendencies. They believe in their country. Or you're in China and you can't really move your money to the US or to Europe, which you're more scared of. You invest in Japanese private sector because the Japanese private sector is still very robust. They still make high quality products. It's very, very, very well respected globally. So I am not, and at the end of the day, I'm not surprised that the Japanese stock market is rallying so much in light of problems in their government sector. But thanks for pointing it out, Joe, because it's hard to keep an eye on every single market across every single time frame. It's very, very challenging.
Okay, so my next question. So right now, like we discussed, what is happening now. I want to basically move towards the positives of it as well. And we discussed this again last week, Tone. Not last week, sorry, Wednesday. But again, I want a little bit of input from Joe. So, Joe, we have seen over the last 4 weeks an inflow of around $21.2 billion into the Chinese market. We have seen the gold and silver prices in China soar heavily. I'm going to basically join them all in one question. We have seen that US investors are pulling the money out, and mostly it is flowing into India. Like you'll be surprised. There is some news of Chinese companies or Chinese investors going towards Japan, but the US money is flowing into India and it's being redirected to India. So right now, Chinese market is in such a situation. But if we look at the Indian market, that is foreign money that comes into India is very, very crucial to the Indian markets. And Indian economy is on the up. So where do you see Indian market from that perspective? Do you see that maybe we are seeing another bigger, player in the market coming up, which could be much bigger than China as it is?
Absolutely. I'm very bullish on India. Full disclosure, I have a very significant stake in INDA, which is my preferred ETF for putting on exposure to India. Yeah, I don't really have much to add to that. I think it's going to be a juggernaut in the next 10 years.
Tone, what's your
Looks like looks
view on
like
that?
looks like Joe looks like Joe is holding the MSCI India ETF. MSCI is a company I used to work for several years towards the latter half of my Wall Street career, and that ETF is at a double top. I like looking at the actual index, not the ETF. So I'm just gonna go and try to
It's
find it.
called
I'm assuming this
Nifty.
is the
Yeah,
Nifty 50 right now.
yeah.
The Nifty 50 is also on a tear. Wow. It is at an all-time high. Once again, I mean, I did have a green arrow on my charts pointing to higher highs, but this thing just keeps going and going and going. Now, once again, the moment I look at the Indian stock market, I also have to go look at the Indian FX rate. I need to go and check the currency rate between the US dollar and nope, that's
It will
Indonesia.
be USD INR.
INR, where is it? INR, there it is.
It's not going to look pretty.
Wow, it doesn't look pretty at all. It looks like it's ready for some devaluation. So again, that's
Hey Tone,
yeah.
I got to jump. I just want to say thanks for having me up. Really appreciate it. We'll catch up later.
Oh
Thank you
yeah,
so
no,
much,
no,
Joe.
thanks, Joe. And I still want to do a little DM with you. So hit me back whenever you're free today, tomorrow, later. Okay, so the currency is not pretty. And once again, if you feel that your currency is going to devalue, one of the safest places to be is in the stock market because stock market adjusts for inflation and currency devaluation. Not all the time, but enough to treat the stock market as a little bit of a safe haven against concerns in your currency and the government bond sector. Now, having said that, I personally would be very, very surprised if any kind of significant money is leaving the United States to flow into India. I would also be surprised if any kind of significant money is leaving China and flowing into India. If I had to guess, and this is just a wild guess, if I had to guess, I would say India with so many people and so many like smart people. Now China also has a lot of people and a lot of smart people, but I think there's a slight difference in that on average, and again, I'm just using averages here. People in China are less financially like speculatively driven than perhaps people in India. So if I needed an explanation as to why the Indian market is rising so much, I would say it's the emergence of the India's middle class that are investing and innovating in the companies, because I would say that it's probably a little bit, I don't know if it's easier, but I think it's a little bit safer to try and, innovate and build a unique company in India than in China for two reasons. One, I think the India's educational system is a little more encouraging of entrepreneurship and out of the box thinking than China. China is more of a copycat society. I don't see them as encouraging, the out of the box rebel. And This is why, if I had to venture a guess, I would say Indian stock market is benefiting from internal investment by people in India.
So
Your thoughts, though?
yeah, so I would tell you, I don't know if you basically did a bit of research on it or not, but you will not believe this, Tone. Only around about 20% of the Indian population currently holds a demat account. So demat account being your account from which you'll buy stocks and all those things. Only 20%. Imagine that. Now, there was a paper on this published by IIT, and they said that if the population of the ratio basically is equal to US, which I think is around 80%, or if I'm not mistaken.
I would be absolutely shocked if 80% of Americans have
Yeah, I
have an
think,
account to buy stocks.
yeah, yeah, I'm not sure about the exact number, but it was way high compared to India. So the paper said if that happens, Indian market will become the most valuable market in the world if that percentage of population of India had a demat account and were investing. So I agree with you to a certain extent that the number of internal investments have gone up, but Indian markets are really driven by foreign money. Like foreign investments, FIs are investors are basically the big players when it comes to the Indian markets. And that's why I disagreed. I think that a lot of money is flowing back into India, which was taken out pre-COVID. It was like during COVID, a lot of money was taken out. But if you see, look at the chart, the bounce that we saw in Nifty 50 was much before we saw anything in S&P or anywhere. And Indian markets were closer to all-time highs before S&P even started creating a proper bottom. So a lot of money was flowing into the Indian market at that time as well. And I think it's happening again. A lot of money is flowing back into the Indian market from all the other, I think, Asian markets, this time not the US market. So that's what I feel might be happening. So that's my 2 cents.
Yeah,
Let's move on to yeah, go on.
I looked it up in the US. It's 60%, 61% as of this year, and it's actually on the uptick. I would have taken the under on 60%, but 80% was just sounded absolutely nuts.
Okay, let's take some questions which are there in the comment section, Tone. So let me. So Sandeep says agree on India. He agrees with you on India, Tone. Sandeep Swan. Thanks, Sandeep. It was like maybe I might have not have too much insight. So we've got a question, Tone. Can the price action of the last halving period really be analyzed given March 2020 happened 2 months prior? Like I think he
Yeah,
means to say COVID happened 2 months prior.
it's a very interesting question, right? So I've been looking at the cycles and how Bitcoin performed leading up to the halving, and it did pull back each time prior to the halving. Now the 2020 was additionally influenced by COVID. Now, to me, the price of Bitcoin still would have pulled back before the halving. It just wouldn't have crashed the way it did. So, if you remove the COVID additional downside from that market, and I'm just going to go back a little bit on my weekly chart just so I can give you a ballpark estimate. I would think that without the COVID, the the November December lows in Bitcoin around $6,500 would have held. So just for people, just to remind people, in the beginning of 2019, Bitcoin started rallying from approximately 3,000. And by April 2019, or sorry, by June 2019, it rallied all the way to 14,000. So let's say from 3,000 to 14,000 in the first 6 months of 2019. In the second 6 months of 2019, it fell from 14,000 down to 6.5. And then the first 2 months, January, February of 2020, Bitcoin rallied from 6,500 up to about over 10,000. I think that if it wasn't for COVID, Bitcoin would have pulled back to approximately $8,000. I think that Bitcoin would have held the $6,500 December to January lows before 2020 began. And the pullback would have been down to the moving averages that sat just above $8,000. And then from there, the rest of the path would have been very, very similar. Breaking out above 10,000 and going all the way up to 65. So when you look at Bitcoin through that kind of lens, I can easily see a top in the mid $50,000 range before the halving, and then a pullback down to the mid $40,000 range, perhaps as low as that $42,000 level that we just broke above, or $43,500 level that we just broke above. That would be my support. If we do go a little bit higher, if we happen to go all the way up to that triple top of $65,000 to $68,000 before pulling back, I can now see the pullback staying above 50,000 instead of going all the way to the 43 range.
Well, we have come in from Alex. The US is 58%, not 80. Thank you so much, Alex. I made a mistake there. So, next question that I'm going to take. Where is it? Okay. Afura also has a question in regards, again, the same perspective. So he's saying, in regards to prior halving high, was the November 21 high legitimate given FTX selling air as BTC? Now that's a good one.
Can you just repeat the question?
He's saying that was the November 21 high that was created, was it even a legitimate high given FTX was selling air as BTC? Like out of thin air,
So,
they were creating BTC.
okay, so was it a legitimate high? Yes. It was a legitimate high, and the reason it was a legitimate high is going to be a detailed answer. The reason it was a legitimate high is because we had multiple weekly closing candles. Okay. And I don't think FTX was to blame here. Remember, FTX was trying to hold the market down. FTX was assisting in keeping the price of Bitcoin low. So, and in spite of that, Bitcoin still made a new all-time high. So the highs that I find a little bit questionable are highs kind of like what happened right before the ETF, right, where the market shot up on a single day. The market went up like an extra 5% in one day, and then the following day it completely shut down. It went up 10% pretty much in a single day, and then the following day it crashed 10%. In a situation like that, I would say that is an illegitimate top because it didn't spend enough time at the top for anyone to have enough time to process what is happening here. Okay. Now, on the way down, it's different. On the way down, everything is a legitimate low, right? Because on the way down, you're not supposed to have the time to think and buy the asset. But on the way up, it's a because remember, everyone has a bullish bias. Everyone wants to buy and hold. So, was it a legitimate top? Yes. Now, when it comes to doing technical analysis, where should you run your analysis from? From the April top or from the November top? And to me, other than the Fibonacci retracement, which absolutely needs the upward tick, and the difference is very, very small on a bigger time scale. Other than using Fibonacci's, to me, everything points to the April top being the more useful and relevant top. That doesn't mean that the next one is not legitimate. The next one made some serious divergences as well. But if you're trying to analyze how long did the bear market last, I would use the April top instead of the November top. And I think I've stated so. Because if you use the November top, you can estimate that the length of time between the November 2021 top and the November 2022 low did not spend enough time in a bear market. But if you use the April top, which I mostly was, then the low coming in at the end of 2022 was a legitimate enough low based on the time scale. So yes, November is a legitimate top, but that may not be the top you want to be using in most of your technical analysis.
I totally agree, Tone. That's a very fair point. And guys, if you look at it from a technical analysis perspective and go to your weekly scale and just put normal Bollinger Bands, right? You will basically see what happened in the market. And this sort of pattern occurs a lot where the price is breaking through the top Bollinger Band. It rallies, 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 then takes, then basically goes back down to the mean and sometimes the lower bands. Okay. And then it tries again to break above. Now, the top in that scenario is always the first top. That is your top to be considered, because if it would have broken outside the bands, it should, if it is a proper breakout, it should carry on, right? So I totally agree with you, Tone, and that's what I've been using all my charting in regards of Bitcoin on higher time frames is the April 21 top, because that's the most crucial one that one should look at. The other one is just a deviation or just a trap, to be honest. It's easy to say in hindsight, but it is what it is. Sorry, give me 1 second, Tone.
Yeah, no problem. I'll take the
Yeah.
time to give some shout outs to friends in the
Yes, please go
audience.
ahead.
We have Mel, Lyric, I remember you, Florida Bitcoin, Jimmy G. Guys, follow Jimmy G. He's building an amazing place down in Mexico. It's called Rancho San Satoshi, a bit of citadel for Bitcoiners and free thinkers. He does every Sunday morning. He does a space about off-grid living and things like that. So check that out. And Michael, uh, oh man, how do I pronounce your last name? Yakubovich. Shout out to you as well. Hopefully we meet up again. I see Terrence has just joined. Shout out Terrence and Joe Sorry is back. Red Pill. Thanks for joining us, guys. Oh, Big Jonas, another trader in the audience as well. I think he's got a book out on trading. We got to have you on the show one of these days, talking TA as well. The Financial Summit guys will take note. All right, Joe, feel free to come back as a speaker if you can. But I think we're running low on topics, right? We're gonna wrap it up
No,
because
no,
I want to go watch the Super Bowl and
I just need
do
6 minutes from you. That's it.
yeah my last unreasonable day of drinking, and then I'm cutting back the rest of the year.
Tone, are you sure?
No.
Exactly. I knew the answer. So, the last topic of the day, Tone, as it has been happening, and I think it is very, very much important for people to basically get some idea on what's been happening week on week. And Tone discussed this in the last Sunday spaces that he will be keeping an eye on the ETFs on a weekly perspective going forward. Tone, did you get a chance to create such a Excel sheet where you were looking at it from weekly perspective?
I mean, it will be the same spreadsheet. I'm just going to grab data weekly. The thing is, I'm not going to have the data for Friday until Monday around 4 or 5 p.m. Eastern time. So the next piece of data is going to come out tomorrow evening on the weekly flows as I do it by hand myself. Though there are like other websites and people post these charts. And I believe last week was very, very good. And there was a lot more buying into the ETF than GBTC selling. But I also think there is a lot of GBTC selling on a little bit of a delay. I think there is still several entities that are being forced to unload the Bitcoin out of GBTC, but they haven't unloaded it yet, but they absolutely will because they have to. And I think that's coming sometime later this month, or maybe even early next month, or maybe they're like just delaying it because the market is rallying and they want to squeeze out the maximum amount of profit. Maybe Joe has something more to say on that note, but I'm just still a little bit concerned of the extra selling. Like there's two types of selling of GBTC. One type of selling of GBTC is because you're getting out of GBTC and using that same money to enter, a better ETF, one that has a lower fee, one that's going to be more liquid, like BlackRock or Fidelity. But then there is another batch of selling of GBTC because they have to. This is your 3AC, this is your Genesis, and whatever else. And I don't think we've seen the end of that second type of selling that is not going to re-enter another ETF.
You had a question, Captain?
Yeah, hi, can you hear me?
Yes, we can.
Yes.
Oh, yay, yay. Hey, Tone. Okay. This is a hypothetical situation. I'm really curious. Okay, so like as far as like incentive alignment and then the whole market in general, like should Bitcoiners who like want to protect freedom money, like should there be stakeholders buying the ETFs in the case that they need to like support freedom money? Do you understand what I'm asking? Like, should Bitcoin
Um,
stakeholders in ETFs in a large scale for the future alignment, you know?
Not really. So, I mean, your question says should. I mean, look, people should do whatever they want to do, right? Like, but look, the best way to hold your Bitcoin is in your own self storage And don't even tell people you know what Bitcoin is. Someone asks you what's Bitcoin, you say, I have no idea, I vaguely heard of it, right? Meanwhile, you're putting as much of your cash into it as you can. And that's the official view, right? Now, if you are looking to hold Bitcoin in certain ways, like in your retirement account or for certain tax advantages, or you want, a nice regulated way to trade Bitcoin, these ETFs are a great option. But remember, the more of the ETF you hold, the more of that Bitcoin is being held centrally by a US government institution. And this is where Joe and I need to do a dedicated space arguing I do not trust the government, and I do not trust the US government. I trust the US government about as much as I trust the Chinese or the Russian government. So that goes to show you how much respect I have for the sanctity of American government and the laws that they try to follow. So the less you can contribute to letting the US government regulate the holding of Bitcoin in an institution, generally the better. So I'm not gonna, holding Bitcoin yourself is always better.
Yeah. I get it. I'm just talking like big picture, like high level, macro level, like can they take control of Bitcoin incentives? Like, is it gonna be too much? Like, I don't know the numbers, like I know you do financial numbers and shit. Like BlackRock holding too many ETFs, like, is it gonna tip? I'm just like nervous.
No, I wouldn't be too nervous about
nervous?
that. I mean, so far, I wouldn't get too nervous over that. I mean, so far, all in all, maybe 50,000 extra Bitcoin is being held versus what was held in a single entity of GBTC. So it's not that different. I mean, once these ETFs are holding between, you'd say, 2 to 3 million Bitcoin, I would start to get concerned. But we're a long way from that.
Okay, awesome. Thanks, Tone.
Thank you so much for your question. It was good. We are always here to clarify any doubts or anything that you were feeling at that point of time in which you want some more clarity from people like Tone, Joe, and many other speakers that have joined. So, Tone, that's it from me. We have discussed all the topics which were meant to be discussed, and I know you are looking forward to getting smashed today. Hopefully, not really smashed, but nice session of drinking. Uh, Enjoy yourself. Enjoy the Super Bowl. Any closing comments from you, Tone?
No, that's it. Thank you so much, everyone, for joining. Make sure you subscribe to the YouTube channel where we're posting. We're going to be posting a lot more videos, and lots of free education is coming to that channel as well. Check out the website where we'll be sending out more info on the Maldives event happening in a little over a year from now. And thank you for hosting the space. Thank you, Joe, for joining. Shout out to Shooter, who just joined, making a documentary about inflation and Bitcoin. So check out his Twitter as well.
How did the documentary that I think Shooter made the documentary, right? In
He did. He made a documentary
Dubai.
on El Salvador.
Yeah.
That Bukele, even the president retweeted. It was great.
Oh, lovely. Lovely. Thanks a lot. Joe, any closing comments from your side? I see you have joined back as a speaker.
Yeah, sorry, I took care of my errand. The only closing comments I want to make is that I'm going to reiterate my request for a dedicated space with Tone to discuss the prospects of America. I'm far more bullish on the United States than he is. I think we're headed towards a new golden era once we get rid of a little bit of turbulence in the near term. And I think people are going to ultimately choose liberty. So, I'm very bullish on America. I think the American market is going to benefit from many innovations, including AI and Bitcoin, and it's going to push back against tyranny. So, we have to have that dedicated space in the near term.
100%. That is on our to-do list. I will reiterate it to the team as well that we need to host it, and we'll get in touch with both of you to find a perfect time, because I'm quite sure that might be longer than 2 hours, guys. So if this space really happens, which Joe has just requested, kindly tell your family and friends that you are not available for 24 hours at least. That's gonna be a long one. So thanks a lot, guys. I'm really looking forward to our midweek space. Joe, I hope you'll be available as well. It's going to be a fun week. We are going to at last see what Bitcoin tries to do from here, because come Monday open, we have a CME gap, and it will be fun to see what really happens after that. So thank you, guys. Enjoy the Super Bowl. Enjoy yourself till Wednesday. See you soon.